Hello, good morning, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be looking at the top market events that are currently impacting prices. And once we go through that, then we'll be looking at the economic calendar, what are the key events today, and then we do technical analysis to try and understand where the markets might be headed next. So, as usual, I would like to begin with a disclaimer that this session is purely educational. It's not an investment advice. It's not a recommendation to trade. So you should practice due diligence and, of course, do your own analysis. So that being said, let's get things started. And I'll be starting with the economic calendar, try to understand what are the key market events that we are expecting for the day. So, looking at the Forex Factory economic calendar, we have had quite a number of data points over the week. Today is Thursday, 30th of May. And from what we are looking at in the economic calendar, we don't have much happening. Yes, we had a speech from SNB, Swiss National Bank Chairman Jordan at 3 a.m. Then later on, we saw trade balance coming from Switzerland, which was better than expected at 4.32 billion. Then we saw Spanish CPI coming in hotter than expected at 3.6%. Sorry, slower than expected, but a big increase from the previous reading of 3.3%. Then the key highlight of the day will be right from the European unemployment rate at 12 p.m., which is midday. Then later on, we'll be focusing on the preliminary GDP data in the US at 3:30 p.m., combined with unemployment claims data, which is a weekly data point. So later on, we will have pending home sales at 5 p.m., natural gas storage data at 5:30 p.m., then crude oil inventories at 6 p.m., before we look at a speech from FOMC member Williams at 7:05 p.m. So tomorrow, before the next market snapshot, we'll be looking at the Tokyo core CPI year over year. This will be coming up at 2:30 a.m. And of course, the Chinese manufacturing PMI at 4:30 a.m. Then later on, we focus on the data that is most awaited this week, which is the Fed's favorite gauge of inflation called the core PCE price index, short for personal consumption expenditures. So that being said, now we can focus on the most important data for the day, which will be the preliminary GDP quarter over quarter for the US. In the previous reading, it was down to 1.6%, and now we're expecting a number around 1.2%. So looking at the previous data points, we know that the GDP has been dropping quarter over quarter. So I want us to focus on these recent data. So I'll try and remove the 2021 so that we have a clearer view. So we had this recession period, which was very short-lived. Then in the next quarter, GDP jumped higher to around 2.9%, dropped to 2.7%. Then we saw 1.4% before the next data point came in at around, this was 2.1%. We had 4.9%. Then it dropped to 3.2%. And now we're expecting around 1.2%, having seen 1.6% in the previous reading. So if you look at the line, you'll notice the sudden change from the high of 4.9%. And this could potentially continue weakening. And the relationship with this data between the markets and this data is that the GDP readings have been very impactful in Fed decision making. So the Fed has two major mandates. One is to stabilize prices or basically control inflation. And the other mandate is to ensure that there is a maximum employment, with the third mandate being much weaker, which is ensuring economic growth. So at this stage in the US economy, we are focusing on one thing, the Fed monetary policy, which at some point investors are expecting that the Fed is going to cut interest rates. So some of the conditions the Fed has laid down as possible ways of cutting interest rates include, one, a sudden rise in unemployment, which has not happened. So in that case, there's still a case for rates staying higher for longer. So they have been looking down to slow down the economy, and one measure of economic growth is the GDP. So far, the economy is still deemed to be too strong, and this tends to be inflationary. So as long as there is a higher or increased production within the US economy, companies are doing well, everyone is doing well, jobs are doing well, then there will be certainly more money in the system, which leads to more inflation in the US economy, something that the Fed has been fighting for the last 2 years. So in this case, the interpretation of the data would be as follows. So on one side, if GDP suddenly increases, let's say from the previous reading of 1.6% and moves higher, then in that case, we should be expecting that data to be completely against what the Fed is expecting. And in that case, rates might stay higher for longer, and we could be seeing a much stronger dollar. So another way to view this data is that the more the US economy is producing, the higher the demand for the dollar. So we could also be seeing some further strength from that angle. So on the other side, if GDP continues weakening and gets to 1.2% or even below, then in that case, it would be consistent with the Fed's expectations, and bets on an early rate cut would emerge. And as a result, we could be seeing a much weaker US dollar. So higher GDP for a stronger dollar, lower GDP for a weaker dollar. So that's the interpretation we'll be following in the day. So unemployment claims data has not been volatile lately. So we haven't seen much of a change, I would say roughly from September 2021. So you can see that the variations are usually very minimal. And recently, we haven't had much impact in the markets from the unemployment claims data. So it seems to have stagnated somewhere around 215K every week. And unless we have a big surprise, I don't expect this data to have much impact in the markets compared to the preliminary GDP data. So if you take a step back and you look at some past, there's times we used to have like big unemployment claims, especially after COVID. Then the number kept reducing, and now it has stabilized around 215K per week. And now investors are not reacting as much as previously, especially during COVID time. So we'll also be looking at pending home sales. So in this case, we look at the change in the number of homes under contract to be sold, but still awaiting the closing transaction, excluding new construction. So this will be a key concern in gauging the housing market. So in the previous reading, we had 3.4%, and now we're expecting a drop to negative 1.1%. So also one data that has stagnated around zero. So we are seeing a big spike upwards, a big drop downwards, and it seems to be alternating over time. You can see that the previous reading here was 3.4%, and now we're expecting something similar. So it's more of a stunted growth in the pending home sales data point. So in this case, an increase in pending home sales basically means that there is more demand for housing. So it basically indicates a heating housing market. Of course, a much lower data point, it means a softening housing market. So from the Fed's perspective, the Fed has been looking to slow down the housing market. So if the pending home sales are dropping, that would be consistent with the Fed. And of course, it would mean a weaker dollar, but the opposite is also true. So in this case, an increase in pending home sales is expected to be quite positive for the dollar. So that being said, if you have already joined the session, feel free to type in your questions or comments, and I'll be responding to that as we approach the end of the presentation. So morning, Robert, morning, Brian, morning, David, morning, Pipita, Waridi, as well as Karil Shi. So thank you guys for joining. So let's get on to the next part of the presentation, which will be technical analysis. So from a technical analysis perspective, we'll be looking at the major currency pairs, major US and European equity indices, and as well as major commodities such as gold and oil. So we may not be able to cover everything in the market, but we'll try to cover as much as we can. Remember, it's a short daily session that happens at 11 a.m. So yesterday we had a big surprise to the dollar making a very strong rally. So we had the dollar index bouncing from here. Then yesterday continued with the rally, basically recovering the earlier sell-off we had seen here. So a very strong dollar drove the Euro USD further back downwards. So despite breaking this trend line and attempting to get to the previous high, we saw a big drop that went all the way to the prior trend line. So we had this trend line here. Of course, we also had the longer one. So if I zoom out, you'd notice that we have had this red trend line here. So there was a big drop to that area, meaning that the Euro USD is still respecting technicals. So having seen this drop happening between Tuesday and Wednesday, then the market successfully bouncing from here. It all alludes to the strength of the dollar. And if the dollar continues being strong for the day, better part of the day, you can already see the dollar attempting to make a recovery after the big sell-off in the last 2 hours. Then we should be expecting the Euro USD to at least retest this trend line here. So the idea would be to go for a short selling position if the Euro USD breaks these two trend lines and attempts to make a move lower. So this would make more sense. If the Euro USD broke the day's low, then we could be seeing an opportunity to go short and continue enjoying the strength of the dollar. So as for USD trading against the Swiss franc, this is what we are seeing. A market that was very strong moving upwards, found some resistance here, played for about 3 days in a range, eventually made the breakout as we had projected, and then dropped to this area here, found support, went back up, and now we are seeing the market testing the same support again. So in this case, it's alluding to the strength of the Swiss franc, and to be honest, it makes more sense to observe a potential breakout here. So if something happens and we get a strong breakout here, then we could continue seeing the Swiss franc further strengthening against the dollar. And of course, if that happens, then there's several areas you might want to consider. There was this range here, which was being tested and retested several times. So in this case, it could be a nice area to target. So if there was a breakout here, then the idea would be to go all the way down to 0.905. And of course, if the market happens to bounce, then we start looking at yesterday's high, which is the same as today's high. So in this case, the target now changes to this area here, in case we have a successful bounce similar to what we had on Tuesday here. But then it's increasingly more likely, judging by the size of the candlesticks. You can see for each hour, the average movement seems to be getting bigger and bigger, meaning it's a major sell-off for USD CHF, and a breakout would potentially imply the market dropping all the way to 0.905. So for pound USD, we have seen the pound being relatively strong compared to the dollar. So after breaking this trend line, we saw the market retesting. So breakout, retest, continuation. We got to this previous resistance. The market was unable to break, pulled back, and then eventually tested, and then made this run all the way up until it got to the previous high. And immediately after that, we have seen the rejection and the market moving further back downwards. So in this case, backed by a very strong dollar, we have seen the pound continue losing since Tuesday. So Tuesday's high, then the price action on Wednesday. And now today, the market is testing a pretty important level, which has been serving as support for a couple of days. So if you notice this area here and today's price action, it seems like an important area to be looking for buys if the market happens to bounce successfully. So in the last 1 hour, we have seen this bounce happen, but then as we approach the London Open, it seems like the bounce wasn't sustained. So in this case, after seeing a strong green candlestick, you would expect a continuation, but it seems like the market is moving further back downwards, backed by a strong dollar. So I would be very interested in seeing what happens when the market eventually breaks this support. So if you happen to see a breakout, then it would imply that there is a potential run all the way down to the previous low. So it's not that much, but potentially drop all the way down to 1.26, 433 for intraday setups. So for New Zealand USD, we saw the market making the same pattern here, breakout, retest, continuation, go to the resistance, then dropped all the way down through yesterday, and we are yet to retest this trend line here. So there's this trend line at play, and of course there's the support area here that was tested a couple of times. So in this case, I still anticipate that we could be seeing some further downside momentum following the strong dollar. So potentially the market dropping to this area here. So 0.60642. For USD card, we are seeing a major test happening on the upper trend line. So we know that these patterns cannot be sustained for long. So eventually, the more level is tested and retested, eventually we tend to see a breakout. So judging from the channel here, the market was basically moving up and down, up and down, up and down. Then we go to this technical area here, where we saw the pair failing to form a new low. And as a result, we have seen these sustained momentum higher, with the lows getting higher, and now the potential for a breakout is very real. So what we are seeing here is an attempt to break. So if I were to adjust this trend line here to reflect on the most recent price action area, which is the previous high here, then there's a good chance we could be seeing a break. So it's a wait and see kind of scenario to see if there's a breakout. Then we start betting on a rally in USD CAD. So that has not happened yet. So we remain patient until we see evidence of strong bullish momentum. So for the Australian dollar against the US dollar, it's a similar pattern with what we are seeing with New Zealand USD. So in this case, the market failed to bring in the rally all the way up. So it only got this previous high here. Then we had the big sell-off happening yesterday. And from what we are seeing here, it seems like the market is reacting to a strong bottom here. So today it has started the day with a big sell-off, then some form of recovery. But judging from what we have seen in the dollar index, there's a good chance we see some form of recovery. If that doesn't play out, then the opposite is also true. So the idea is to see if this bullish momentum is sustained or if the market goes back to this area. So if the market goes back to this area and happens to break, we continue shorting the Australian dollar against the US dollar. But then this recovery seems unlikely, but it could also play out and the market heads back upwards. So I'm betting on a strong dollar today. I don't know about you. So we might have to check the GDP data later in the day and see how it might impact the markets. So for USDN, we've been talking about a rally above this area here. So you can see the previous intervention points that led to big sell-offs. So in this case, we had the market breaking this level. So we remained bullish, even though the market ranged for about 3 days before making that rally yesterday. So there was a breakout, retest, and then continuation. But then immediately the market opened today. There was a big sell-off, and we went back to 156.769. And now it seems like the market is bouncing yet again. So a high of day might be an interesting idea to play today, though with very tight stops. And as we have mentioned previously, we don't know when the Bank of Japan will be looking to intervene. So in this case, a potential rally towards the day's high might end up being the play for the day. So it seems like silver is stagnating. So having made this breakout from the triangle, a very strong rally didn't quite get to our target. But then from what we are seeing here is a market that is changing the trend. So looking at the progression of highs from this high to this high, and then this high, and then this high, it seems like the market is changing direction. And today we have already formed a new low, which means that we could be seeing a short-term pullback in silver, having failed to form a new high. So in this case, if you look at it this way, it's almost like a double top formation. So if this was a double top formation, then of course this would be our neckline, and you would expect the market to form an M kind of shape, having seen the momentum starting to weaken. So we have seen this play out time and time again. So in this case, temporary pullback, notwithstanding that the main trend seems to be bullish. So from the daily perspective, you can see it's a very strong bullish momentum, but now we are starting to see signs of weakening in this trend. So having seen 2-day pullback, 3-day rally, 2-day pullback, and now the current high is not the same as the previous high, as this one went a little bit higher, then it might make sense to continue trading on the lower side, betting that the market will take a breather before continuing the bullish rally. So for gold, it seems like we have our usual pattern. So this is quite common with gold. It basically forms a bottom, makes a rally, pulls back, wipes some liquidity here. So you can see the stop losses that were just beneath here were just wiped in the last 2 hours. And now we have a strong case for bullish momentum. And of course, we now start focusing on the weekly high. So this is the highest price we have seen in gold this week. And seeing the market bouncing strongly, we could be seeing a rally towards 2361. So it's a very interesting idea considering that the overall trend in gold prices has been bullish for the better part of the year, having seen both the Chinese as well as Americans buying record amounts of gold. So from the forward chart, it's still slightly bearish, but then the way this candle crosses will determine whether we have a strong entry by buyers in the market. So Brent oil, having made a 3-day rally, started changing direction yesterday. And of course, it maintained the same pattern we've been focusing on for the last couple of weeks. So we had this pattern here that looks like a loudspeaker, and the market has maintained within. So after hitting this high, there was an attempted break and the market reversed, and now we are seeing Brent oil potentially moving further back downwards. But as we mentioned earlier in the economic calendar, we will be expecting to see US crude oil inventories, which might have an impact on prices. And depending on the outcome, we could be seeing some further progression down to 81.592, but also a bounce depending on the change in the number of inventories. So US equity indices were basically selling yesterday. So after seeing the strong rally here, the market didn't quite get to the target. So this was the end of the rally here, which was a high, which is lower than the previous one. And then a big sell-off for the last 2 days. And I expect that this is now shaping up like a market correction. So in this case, there is an expectation that we could be seeing some further bearish momentum later in the day, similar to what happened here. So we could be seeing further weakness in the S&P 500. For the Dow, it's similar. So if you go to the daily chart, it's a perfect double top formation, usually with an M, like the one I just described in a previous chart. So a big rally drops to the neckline, big rally drops back to the neckline. So for intraday trading, it would make more sense to target that $7,600 per share. So then there's the Nasdaq attempting to make a recovery. Remember, tech has been the strongest this year. Though if you literally check the sector by sector performance, it seems like the utilities are also performing as well. So in this case, we've had a top here, and the previous top was lower than the previous one. So in this case, there is a full case for a potential pullback in prices. So from the daily chart, it seems like we are approaching a third day of price failing to close higher. So we could be seeing some further downside momentum, though the current London Open is indicating a very strong recovery. So if I was looking to short the US market, I wouldn't be going for the Nasdaq. I'd probably be looking for the Dow and SP 500. So it seems like the Nasdaq momentum is pretty strong, especially considering the performance of NVIDIA, which maintained the bullish trajectory yesterday, though by a slight 0.8% gain. So in this case, further momentum in the Nasdaq and other tech stocks could drive the Nasdaq higher, but the US30 seems like its goose is cooked. So Bitcoin still maintains within this sideways momentum. So in this case, we saw the attempt to break higher, which happened here, but the market failed to sustain the rally. So now what we're experiencing here is the market extending this triangle here. And with the triangle, it basically means that the market is just moving sideways, and there is no way we are going to, sorry for that. I just wanted to illustrate the triangle here. So there's no way we are seeing any form of trend. So at some point, we should be expecting to see a breakout, hopefully not to the lower side, especially for the majority who are on the bullish side. So in this case, potential break above this trend line would signify that the market is headed higher. Of course, a potential break below this trend line would potentially indicate that the market is headed lower. Of course, there's a longer term trend line here, moving from the 1st of May, which has been acting as support. So you have to be vigilant if you're looking for an opportunity here. So natural gas, also expecting some data later in the day. So while we have seen crude bouncing, in this case, crude made this rally and the pullback for one day. For natural gas, it's not the same. It was a very strong rally, but now we have seen a week-over-week decline. So hopefully we'll get some momentum coming in the New York session once we get the natural gas data. So high-grade copper futures, which have been one of the most bullish assets this month, has been pulling back downwards. So after this big sell-off a few days ago, we have seen the market attempt to recover, but further momentum downwards is continuing. So today it was a big sell-off. We got to this area here around 4.6919, and immediately after the break, we have seen the market rebouncing. So as usual, we all know the pattern. So we look at a breakout retest continuation. So in this case, an expectation that the market made this breakout. So try and remove this. It's going for a retest. And the idea is to look for evidence of short selling around the breakout point. So around this area, look for signs of entry by bears, which would imply that the price is headed lower. So CAD JPY, we've seen the Canadian dollar being pretty resilient, but over the last one day, it was a big sell-off and then further bearish momentum today. But now it seems like we are finding some good support along this area here, which has been the case for the last couple of days or for the last 3 weeks. So this has been a pretty strong support. So we are seeing the market making a very strong bounce here, and it's a similar story with USD JPY. So USD makes a big drop, finds support, and is now moving higher. So CAD JPY might be a candidate if you're looking to short the yen, looking at this price bounce and recovery towards the previous high around 114.801. So that's it for the day. Thank you very much, guys. Thank you for your time. So I'll be checking the comment section for any questions, try to respond to the questions as we approach the end. So hello, J Squad. Bond yields may be moving higher, mainly due to supply of bonds and the continued massive deficit. Let me highlight the comment here. And not because of a concern around inflation or strong economy. Can you explain these sentiments? So the bond yields are moving higher as a result of further expectation that the interest rates in the US might be headed higher, and some Fed members are already recommending going for further rate hikes. Some other Fed members are also recommending holding rates higher for longer. So that seems to be the base case. So as long as we have that expectation, then investors will still try to squeeze some juice from the bonds, especially the short-term ones. So in this case, there's a good likelihood that the new demand is based on the data we are getting on inflation, which has been indicating that inflation is tougher than expected. So this Friday's data point will be more important to bond holders because they are trying to front run the Fed. So if they know the Fed will hold rates higher for longer, then they know the yields will be good, and then they continue squeezing those interest points. So in this case, there's a good chance that what we are seeing in bond yields is reflective of investors speculating or basically front running the Fed. A good question from Sajesi. What was that on the JPY? I also had my suspicions. So looking at JPY pairs, I had the suspicion that the Bank of Japan is intervening, but then it's not as strong as the previous interventions. So looking at USD JPY, you can see it's a strong momentum, but not the same as the previous interventions. So if you look at previous interventions where the Bank of Japan agreed or basically accepted or acknowledged that they intervened, we had this 1 hour candlestick making a big break downwards. We also had this point, the market making a big break downwards. So for this one, it seems more like speculators taking profit, market pulling back, and now it's continuing with the overall trend, where the carry trade keeps driving the JPY further downwards. So what time frame do you use for technical analysis? So for these sessions, I acknowledge that we have different types of traders attending the sessions. So you'll notice mostly I'll be switching from 4-hour charts going to 1-hour charts. And when we have a volatile asset such as gold and silver, then in some cases you might see me jumping into the 15 minutes time frame. So personally, I use 1 hour time frame to do further analysis, 15 minutes to strike entries. We have a good question from Relax. Are the USD and shilling exchange rates on FXPesa live? Yes, they are. So when you're making a deposit and you indicate the amount you intend to deposit in Kenya shilling, so you'll see the resultant amount in dollars before you make that transaction. So it's usually live. It's not something we adjust. So a good question. Your take on using pattern detector indicators. That's really good. So if you have an indicator that detects patterns in the markets for you, it basically makes the work easier for technical analysis. The other one, can I change my lot size from 0.001 on MT4? The minimum lot size is 0.01. That's the micro lot. So we don't have 0.001. So I believe that was the last question. Thank you guys for attending. Remember, these sessions happen every day, Monday to Friday at exactly 11 a.m. And of course, if you have any further questions, feel free to reach out. And if you're just starting trading, make sure to check the links in the description below to register for an account. And that's for the people attending on YouTube. So if you're checking these on Twitter, you can check the FXPesa page and get the links to create your live or demo trading account. Of course, if you'd like beginner sessions to understand some of these concepts, make sure you go to FXPesa YouTube, then look for the Novice to Pro series, which basically helps you understand what's happening in the markets. So when we are drawing lines here, trying to describe support, resistance, and market patterns, they will make more sense if you've gone through that 10-episode course. So thank you very much, guys, and I hope to see you on the next one.